common mistakes all traders do in the beginning. And when I say all, I really mean all. The most important part, the first thing that we need to check is risk management. When you are entering a trade, you must use your money wise. This is the most important part in trading, the risk management. You need to set from the beginning the percentage of your account you are willing to risk per trade. You can start by risking 1 or 2%. This is up to you. For the purposes of this video and the real account that I am using, I'm risking much more, maybe more than 10%, because I know what I'm doing. But when you are beginning and when you are beginners, learn that risk management is the most important part. When you are entering a trade, keep in mind that it's a live market, so probably an opportunity will come. So let's say that if you are go for hunting and you have bullets in your gun, leave some bullets in your gun for some future trades. Risk reward ratio, I have covered that in several examples of my videos on how to trade the basics, on the flip coin paradox. In this video, in close to the end, I'm showing a very simple example. There is a table, there are some simple maths. If I could say my opinion to this point, I do not trade any system that it's gives a one-to-one risk reward. I personally avoid it. If you have significantly high accuracy and you prefer such a system, you can be profitable. In my opinion, a 1 to 3 or 1 to 4 is starts to be debatable for me, because the market is very weird and strange, and you will understand that in time. I have given example here. In the red area is my risk, so let's say that I've risked 1 and my reward is around 4, 4.5, 5, even much bigger. Learn to control your emotions. I think this is one of the hardest part in trading, because you are trading against your own self. When you are taking a trade, the market moves the opposite direction right away. The stop loss is triggered, and then the market starts to move in your favor. You are feeling anxious, annoying, you are getting angry, you are almost very you are actually unable to control your own emotions, and this will keep repeating again and again. Trust me that as the time goes by, there will be many cases that your accuracy will increase exponentially. Practice will make you better. In trading, nothing is written in stone. Sticking to the rules is effective until it isn't. I know that it sounds a bit weird, but it is a fact. There are some rules in trading. I have already analyzed and explained in several of my videos. Realistic expectations. Mastering trading can be painful, very painful and time consuming. Don't bother to look videos with fancy cars and houses, with gurus that they don't have even a real account to demonstrate, and don't have unrealistic expectations. It might not happen in a day, it might not happen in a week, or in a month, or in a year, or 5 years, or maybe it will not happen at all. Numbers are against you. And why I'm saying that? 95% of traders are losing money. For every loser, there is a winner. For any order you execute, someone is willing to take the opposite direction. Market is not your friend. Market will move irrational. Remember, you are not trading prices, you are not trading commodities, assets, future, forex. You are just trading opinion. There is no such an expression like overbought or oversold. Of course, we are using these expressions most of the times when we are using indicator. Many problems can come from this. by using these expressions, and it doesn't matter if you think or if you indeed you analyze the market well, or your asset well, or you check the profit statement, or you check the statement of a company that you are willing to buy. It doesn't matter if you evaluate it well. Remember, the market can stay irrational longer than you can stay solvent. Don't trust indicators so much. Learn to use them. They can help you to take a decision, and this refers to the mechanistically part of trading. The more mechanistic is your trading, the better. I mean, the less emotions you put in your trading system, the better and the easier to execute. And this is the reason that many people prefer the bots, because they will automatically execute the trades. They won't think, they won't take any emotions, they won't oversize, they won't over leverage, they won't take any other decision than what it's written. And this is also important to understand, that when you are using indicators, you will have many wrong signals. It doesn't matter how good the indicator. We have analyzed the indicator. We will analyze all of them in this channel. I can give you any details regarding any indicators, and we will see them in the future, the pros and the cons. Trading too much too soon. Do not open your entire position right away. You don't have to be afraid that you will lose the price. Most of the time, market comes in the same price again and again. This will give you a better entry point, and you will be able to average your position. Remember, don't waste all your bullets right away. Don't stuck too much to your trade. Admit when you are wrong. You want to make money, and you don't care if you are wrong or right. This is also a psychological part. It's in our nature. We want to be right. We are searching for confirmation bias most of the times, and you need to get rid of that idea. You don't care if you can predict the market correctly most of the times. You want to make profit out of it. Cut your losses early. Leave your profits running. This is a huge chapter. I will make a separate video on that, because actually, in my opinion, it can be a turning point in your strategy and in your trading plan. And this is the most difficult part when you are trading. You have the fear of you might lose the train when it will come close to your target. You are afraid that the prices might reverse, and the opposite. When the prices move against you, you have that you have that belief that at some point there will be a turning point of the market. The market will come in your favor, and you will keep losing and losing and losing, maybe betting against you, maybe opening another size, and this will probably destroy your account. Cut your losses early, very important, and leave your profits running. Leave your profits running by using profit targets. When your first target reach, take some amount of money. When the second target reach, and so on and so on. When you start reading the market correctly, you will see that most of the times the market will move in your favor, even if you are exiting the trade. And this might also be very dangerous, because you don't want to be greedy. You don't want to go to the other side. Practice, 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 practice. Practice a lot, make a lot of demos, make a lot of tests, make several accounts, backtest your strategy, backtest strategies that you are hearing. Most of them that you will find on the web looks very fancy. They can guarantee results, the trading technique, the ABC plan, the trading indicator with one button and whatever. This is the reason that I have created this channel. So you can see that all of them are just scammers. You can send me any strategy that you are interested to discuss. Of course, many traders will agree in the demo part that it's better to start with a real money. In my opinion, this is debatable because it will also help you if you start with a demo. I mean, you have nothing to lose. You've learned the basics. That you can also check in my video trading the basics that it's very helpful starting with a demo account. Study your market and the environment you are trading. Observe the market before entering. A good 1 year cycle is a very good example before starting to trade. Many people do not trade FX due to low volatility. High liquidity generates low volatility in the markets, and this is something very common. Make sure you have spotted the most important news for your market, some major events that you know that can affect your market. It doesn't matter what your market you are trading, you need to find some correlations. Either you are trading assets or if you are trading binary options, you need to find what is the most correlated asset with the market that you are trading. There are many sites that can give you for free the correlation in different time frames. If the markets don't agree, then do not trade. Market loves round numbers. This is part of human psychology and how our brain thinks and works. Try to dive earlier, in this case, when there is a number, a round number closer, and take it into consideration when you are putting your stop loss, if there are any round numbers close to your trade. Do not follow the crowd. You do not trade prices or commodities or anything else but opinions. Don't go with the crowd. A trader, it's nothing more than a speculator. It speculates prices at a given momentum. So do not follow the crowd. There are many times that I have taken winning trades against the 90% of the traders. You must be creative. A good strategy must work at all time frames. I will admit at this point, at this presentation, that changing time frames can be annoyingly confusing. This is the hardest part in my perspective when I try to change a time frame, because when you use the 15 minutes, for example, the market is down, but when you are changing to 1 hour, the market goes up. Changing to 4 hours, the market has a different direction, and so on and so on. And this can make very confusing. So you need to change time frames by starting with a bigger one. Let's say you want to have the bigger idea of the market and then try to zoom in into smaller time frames. It's good to start with very small time frames, even they are most noisy and they are confusing, and try to predict the direction. This will help you advance in your technique, even though they are noisy, but it's a very good practice technique. Try to guess when the prices will go. We will analyze the Elliott theory. I mean, this is my major trading technique that I am using. The first thing that you will notice in the market and the way that it is structured, it is that the market is moving in waves. It is wave inside wave inside the wave. That's why we will study also the fractals and how they can, how we can use them in our favor in the market. We will see that in different videos. I will make several videos for this topic, especially for Elliott waves. In my opinion, it's something that can work the best when we have to do with this kind of markets. Gurus. Don't spend money to robots out there. Don't spend money to gurus. If they know how to make money, they wouldn't request money from you. They would do the opposite. They will give money to you. always request a trade account history like you see in my videos. If you keep fail and fail, then trading is not for you. Trading is not for everyone. I have mentioned that many times. A trader that doesn't trade at all is more profitable than a trader who keeps losing again and again. There are a lot of sites that you can take information. There are many serious traders out there that are willing you to provide with an insight. Avoid markets with small capitalization. You will compete some of the big boys out there, some of the big players. They are really giants. Try to avoid markets that they can be easily manipulated. Unless of course you know one of these big boys, then stick with them. Avoid scalping. Do not start scalping or any other strange technique that you will hear out there. Most likely this will ruin your trade and your account. In this video series, I have an example with live markets in the non-farm payrolls video if you want to check it. I am trading in a real market before the events come out. After the event is coming, I am showing you live a scalping opportunity. In any case, avoid scalping at least in the beginning. You will see that this will come to you mechanistically while you are getting more and more experience. Clean charts. Try to keep your charts clean and simple. Don't use so many fancy indicators. They are meaningless anyway in trading. The more conditions you are putting in a strategy, the more rare your trades will become. Keep it simple. Keep a simple system that is able to generate trades constantly. Remember, you don't want to be right in the market most of the times. You need to be profitable. The more mechanistic is a trading technique and the less emotion you are involved inside, the better. But the main idea is to keep a clean chart. Thank you very much. I hope you enjoyed the video. I will see you in the future and thank you for your support.